Hello and welcome to Paper Traders, a show where two average Joes try to beat the market. I am your co-host Eric, and I'm here with Danny Mac, and I also have a guest here today, but we'll get to him in a moment. Just reminding you, we're streaming on all your favorite platforms, so please like, subscribe, and comment. We also are streaming live, so I can get your questions live. So be sure to throw those in the comment section, especially when you find out who our guest is today. You might have some questions because he's a fairly well-known macroeconomist. Or economist, I guess I should say. On top of that, I would also like to remind you to listen to Ben Rain's show at the same time block at 11 o'clock on Monday or Tuesdays and Thursdays. I'm just tongue-tied today, it seems like. Must be something in the air. And then on top of that, I would also like to say that we are going to be going through a little bit of a format change with this show. We're going to try to have more guests and less commentary. So what we're going to do is we're going to try to go to once a week, which will be on Wednesdays at this exact same time. So in the meantime, I'd like to get to our guest.
Yeah,
John
speaking
Blank.
of guests, welcome, John.
Welcome, John. We actually have him in-house this time. He's not just coming in via Skype.
Yes.
So, John, we are in very interesting times here in the market. Things seem to kind of be calming down for the most part, it seems like.
At least with, Trump coming out with tweets and, more news, I guess, shaking up the market from that perspective. But yeah, I mean, like Eric said, it's been pretty crazy here lately. And we just want to get your kind of two cents on the whole thing, because at this point, we've had the recession word thrown out. We have trade war with U.S. and China. So it's just a lot of big hubbub words being thrown around that are scaring investors. So I guess just to kind of start off, who's really being hurt by this trade war? Is it something where it's just U.S. and China, or is it really impacting kind of the global economy?
Well, I mean, as you know, I wrote this piece about the trade war, and I try to keep it a page long and really simple. But
I've got up here while he's talking to Andy, if you want to show.
So I want to kind of reference this for everybody because you can read it later, and I want you to read it later, as I wrote it in a coherent but succinct way. And my point here is, let's start from a place that's valuable right now in September, mid-September, when there will be likely a meeting between the U.S. and China in October, right? That will be the first meeting after an escalation period. So talking about whether it's wise or not or what's going on is probably less compelling than trying to think about what a solution would be to propose in front of a meeting. Right, we know the meeting's there. Let's be forward about it. So we want to be in front of an event, not talking about events.
Yeah, and kind of going into that meeting, is there something that we should be expecting from them, or is this something?
thinking?
Well, we saw today. The first thing that we saw today was newsworthy, and that took the market up, which was Chinese is only going to focus on 25% escalation on farm products and excluding other things. So they're beginning to move away unilaterally from tariffing on their own. Now, that gets to my 3 points that I laid out in my piece as you read it. Well, number one, there is an issue with China that is valid from a U.S. perspective.
I think you're going to be talking about the intellectual property issue.
Right.
I would highly agree with that. I think that is a huge problem.
Okay, now let's use a quote from the FBI.
Yep, I've got that quote up right here. Number one, the FBI has 1,000 investigations to Chinese intellectual property theft.
Right. So now we have 1,000 of these things, and I'm sure there's more.
That's got to be underestimated, in my opinion.
Probably underestimated. And then there's the Japanese Chinese one, the South Korean Chinese one, the Taiwanese Chinese ones, the Australian ones.
Vietnam, I'm sure, has probably got a couple.
Right. So here's the problem. Intellectual property and saying you stole it is not helpful. What would be helpful is having the FBI come to a working group with the Chinese, who actually would welcome some of this information because they probably don't know it themselves because the FBI collected it, and say, here's what we know about 1,000 instances of this. What do you know about these people? What do you know about what's going on? Can you illuminate us? And can we start to solve or at least define buckets? Here's the apparel trademarking issues. Here's the semiconductor design copywriting issues. Here's the actual theft of property issues. Some will be
Code's another big one.
Right.
Wouldn't Highway or Huawei or however you pronounce that, wouldn't that be a big one?
But Huawei would have 4 or 5 buckets they'd fall into, screen-based things they're taking versus things in design versus the other
operating system.
Right, so we'd have to get on the table, and all of a sudden you can see already with language, our language is trading, and we're getting deeper into it. So that's what you would want, is this to be put on the table on both sides, and then inbound and outbound intellectual property would be the thought. Because what you want here is, right now they are being accused of stealing inbound property, right? You send something to China to get made, and they steal
And
it
they
out.
steal them and make it themselves.
Right, but the thing you got to remember is
Famously,
they have
probably be
a very
Samsung.
long-term interest in this thing, because ultimately they will and have developed, and they will have their own designs and intellectual property that will go outbound. So the whole point of this thing is to say, look, this cooperation will never end. These debates will not go away. So we need to start a framework and a dialogue and an arbitration and mediation between the two groups, and just start ironing these things out. And again, this is stand alone. Now, this is key, because right now the United States is not letting this stand alone and letting it whittle itself down, right? We're just talking and shouting, and then get to my second
It's a lot
point.
of finger pointing at this point, because there's no real agreement between either of us on how to handle this.
No, and we don't
It's
get
like
to
copyright law. Copyright law is very complicated that exact same way.
right, but it's much different to say I'm stealing the intellectual property from you guys than saying I'm using the paper trader's trademark in Australia.
Right.
That's a different issue. You can go, oh, okay, well, that was not a big market for us, but we'll talk about it. Maybe I don't care about it. You know what I'm saying?
Right,
Yeah.
right.
When we start the language, get to the granularity and define the issues and start to solve them. Now, number two, the U.S. trade deficit with China is $500 billion.
Yeah, that's a lot of money.
And half of that is coming through Hong Kong. So first thing you understand about that big number is half of it goes through Hong Kong, which tells you a little bit about China. It's what's called an entrepot, which means things come in and get distributed back out. They basically collect stuff. It's
The
coming
choke
and going.
point.
Yeah, there's the whole region is using Hong Kong to bring stuff in and out. The Chinese themselves are actually not the lowest cost. They have the biggest clusters.
Right, because they outsource, as I've heard, to other countries around there.
Yeah, 'cause
Vietnam,
right.
Taiwan, all these other
The average,
small
the
island
average,
nations.
yeah, the average hourly wage in China, don't quote me on it, but it's just to give you a benchmark, it's $4 an hour,
Right.
which is not what you can get in Vietnam. But Vietnam, there's no cluster, there's no knowledge.
Right.
You got to ship that stuff in. So we have $500 billion. Now that sounds like a big number, but remember, they're a $16 trillion economy. We're
Right.
$20 trillion. So for both of us, this is 3 or 4% of
Right,
our
it's
entire
not all
earnings.
that much, but I mean, still, that's jobs and money that are being lost, so to
Well,
speak.
this is how it's
somewhere.
characterized. Now, what you need to understand as a macroeconomist is it's macroeconomies have debits and credits just like accounting, right? And so if you overspend in deficits on your federal budgets, you're going to overconsume on the other side, because
Right.
overspending will be met with overconsumption. So we basically, through tax cuts and over too much spending on military things and too much spending on healthcare, too much spending on a lot of things, doesn't matter how it is, we got a deficit, which lo and behold is about 4 or 4.5, just like that trade deficit. A lot of it is stacked up in China because they're the biggest supplier from outside. The point is, we've blamed them on it, and almost 190 out of 200 macroeconomists will tell you that we have to cut the federal budget deficit down to cut the trade deficit down. We own it. It's not their problem. And by increasing the deficit through the trade and tax cuts, I'm just the tax cuts of the last years, we've increased the deficit with them. So we're doing the wrong thing already.
Right.
And we have to own this. We are Americans. All three of us are owning this. It's not a right or left issue. We own it. We created it. Made in America is
It's already here, right?
right.
It's
The
not-
Made in America is the U.S. federal trade and budget deficit, called twin deficits, right? So we did this. We have to have this discussion, and it has to be in Washington. It has to be bipartisan, because you have to get tax increases. You got to get spending cuts on military and healthcare and entitlements and all this other stuff to get it done, and it's got to get a timeline, and all this stuff has to happen. So again, this is probably 2 or 3 years of work.
So it almost sounds like I guess this whole trade war in general is not really the solution to cutting off the deficit.
Exactly. This is another issue with a different set of players, and we are already doing things to increase the federal deficit, so we're working against solving this problem internally. So it had nothing to do with the Chinese, and it will never be solved with talking to them. So we got to quit blaming them, because it's just it's diversion. It's called diversion. We're just pushing it onto them. We don't want to deal with it in our own politics. But we own it. We created it, and it will not be solved until we deal with it. So number two, that has to happen. That dialogue has to happen. We're having it now. That's
Or
what
we're
it is.
trying to, at
At least we're
least.
trying to, right?
Right.
And everybody out there's got to understand that's the real issue, and it's been around for 40 years. Through the only group that ever dealt with it was the Rubin Treasury during the Clinton years, and the other groups did not deal with this. So here we are, and that's number two. Number three, the tariffing.
Yeah.
The tariffing has simply cut into global growth, right?
It's messing with everybody.
So
Right.
it is so this trade and tariff war type of thing it is causing what everybody is seeing as, I guess, these indicators of recession. Is that kind of
Certainly in places like Germany, where you have large exports of capital goods to Asia, and the uncertainty is, and the tariffing is commingling to take down their exports.
Which it won't do.
So-
I mean, tons of the whole world buys from China. You know,
Eventually,
I mean,
China buys capital goods from the rest of the world to make these things.
Right.
So eventually, what happens? You can see it becomes global because they push back on things from that choke point or that cluster. I guess is probably a better word. They're big the manufacturing cluster of the world is China, and then everyone, raw materials, capital goods, all get pushed back when China has stress. So they're just pushing it out, the stress out and out into the world as this thing goes on. So
and I mean, they're just like a huge economy. I mean, China, there's been multiple articles out there about how they're just buying up the world. I'm trying to find the story now while we're talking, but Hong Kong Stock Exchange offers to buy something, the London Stock Exchange. I mean, they're just in everything. So how can you deny their,
they're here.
they're here to stay. They're not
they're
going
here to
anywhere.
stay.
So
Yeah,
we
I mean,
gotta.
we're one of the biggest economies in the world. I mean, of course they're going to have that type of impact.
We should be playing nice, if anything.
No, I mean, basically, we got again with this issue. We just got to realize we're not helping ourselves deal with the previous two issue by slowing global growth down because it hurts us and them.
And everyone.
Yeah, so it's a negative sum game, not a positive sum game or a zero sum game. It's a negative sum game. We're all losing with the tariffing,
Yeah.
which is why the Chinese exclusions were good news because they starting to say unilaterally, trying to get the Trump administration to realize let's just take the tariffs off the table as we start talking.
There's better ways to do this, basically.
Just take the tariffs off the table because then talking about those true prior issues can happen in a better environment.
Well, because I imagine those two are very related. I mean, if you're trying to go and tax somebody on Samsung phones going out and you're having a battle about whether or not they own the intellectual property to even produce that device,
And then you go ahead and tariff it.
and then you're in a stalemate.
It's adding problems to a problem, right? It's compounding and commingling problems. So you don't want to do that. So unilaterally, and that's what we can hope for, is a tit for tat de-escalation into the October meetings on tariffing. The best thing that could happen is Trump could say, we're going into the October meetings and we're going to now go back. The 5% surcharge on tariffs that I threw out there, I'm taking it off the table as we move into the thing. Just as an example, if he simply did that, we get a very strong bid out of the stock market. Certainly out of the international ones. So my point is, that's a solution. Now, let's discuss why it's not going to happen.
Yeah, my next question was basically going to be, what's the best case scenario here
Okay,
with all these solutions
yeah.
and the trade talks coming up in October? Can we expect anything happening that you're
And
saying?
we're
Is there
basically
any
a year
hope?
out from an election. I mean, that's got to be what the Chinese got to be holding out for, hoping that somebody else comes in that's going to be a little bit more
Well,
soft.
I don't know. I mean, like John just said, they came out and are trying to kind of step back a little bit from the tariffs, trying to maybe show some goodwill. I don't know. So maybe we won't have to wait till 2020. I don't know how Trump will feel about it and how his administration will.
Or how the next administration might feel. The next administration might. I mean, it's one of those things where, what is that term? Like, know you're the demon you have or something, or
The devil you know versus the one you don't.
There you go. So I mean, you might come into somebody who's twice as hard on China.
Well, here's the thing. I mean, again, let's go through the three things. So you have to bring the FBI in to deal with intellectual property. What's the likelihood of this president doing that?
I would say probably pretty good. He's
in a fight with them.
hawkish.
He's fired. the
Yeah,
head of
I'd
the
say it's
director.
very slim to
Well,
none.
he's not finding somebody on his side, but I think if he found somebody that met his standard, we'll say he would probably be willing to send somebody in there.
I don't agree. I think he doesn't get this intellectual property issue.
Oh, I don't think he understands
I don't think he
the
understands
scope of it, to be honest. But I think
nor does he have the mentality of going into details and educating himself or hearing somebody who has. So I think it's very low.
No, I mean, he just got rid of what was the defense secretary
Bolton.
the other day, Bolton.
But that is actually heading in the right direction, which is getting rid of obstacles. People
he was a hawk. He
arguing for more escalation.
Right.
But I don't think that had anything to do with this because he was
no. Obviously, it doesn't. But I'm saying he's getting
National
rid of
security
people
and
that
trade.
are causing maybe a little bit of a stir.
Yeah, if Bolton is an example of him moving closer to Navarro and Miller and Lighthizer as the next people to get booted out, I would think that would be appropriate steps towards my solutions being implemented. But again, it depends on who comes in.
Right, exactly.
So
this is the unknown. This is exactly what we're sitting here debating.
Two choices,
we're trying to figure
right?
out.
It's like buying and selling in markets. I mean, people say, why not time it? Because once you're out, you also buying, you're buying your way out, and then you got to buy your way back in. You get two choices every time you do that, not one. Same thing here. We get rid of him, so then who comes in?
Right.
Then so the question is, markets don't do much on those types of news because we simply. Again, it's uncertain. We simply don't know who that guy, and then the other guy shows up, and how long does he stay?
Who knows? Could be tomorrow.
Right.
Could
So
be
again, the problem is intractable because this track record is everyone's mind at 3 years out,
right?
And it is what it is. So number one, intellectual property being defined granularly, and the FBI brought in, president endorsing that idea, very low. Number two, bipartisan commission on budget reductions. What are the chances of that happening?
Probably not very good.
Right.
Nobody likes to agree to lose money.
The president has only gone out today on a capital tax gains increase to raise the deficit worse and create more of a deficit with China. Now, what people don't understand, it will create more of a deficit with China, period. It just will. That's how the accounting identity works in macroeconomics. So it's making it worse for sure. And he's not been called out on this. From just the trade perspective, he's getting a trade war, and he's creating more of a trade deficit while he does other stuff.
Right.
So, is he going to get the message? Or is someone going to tell him it? Is he going to listen to me? The answer is no. He's not.
Yeah.
So that's number two. Number three, he has to de-escalate and unilaterally. I mean, without talking to Chinese.
Oh, we already know how he likes to de-escalate, so
Yeah.
I don't see that going very well.
There you go.
You
So
know.
he's never de-escalated anything.
Right.
He's only escalated. So
I do have to give him a little credit. He hasn't come up with a nickname yet for whoever he's dealing with there yet. So he's not being brutal.
right.
Maybe this is his tame side.
Hard to know.
I'm trying to find a silver lining here.
Right, but what we're in is a very low probability environment where there's going to be a trade. If there is one, it's a low likelihood that it achieves anything.
Right.
So the bottom line is there is an overuse of a kind of an idea here, and that's called no pain, no gain. The idea here is we're going to create this pain, but they're going to suffer, and then we're going to get the gain.
Which isn't going to work out
But
that
it
way because
sounds
we're
like-
all in pain right now.
Yeah, I was going to say, it sounds like we're all kind of suffering globally, not just the U.S. and China. So I don't get that.
The simple point is what I laid out for you can be done without pain at all. The whole point is to gain by getting rid of the tariffs so we have a better environment to talk, more wealth and growth to distribute.
Right.
Disaggregate the tariff, the trade deficit from the intellectual property thing so we can define it better, and then disaggregate the intellectual property thing until we can define exactly what we're worried about, what we can't agree to. That's a solutions sort of incremental and separating and isolating issues, and it's just simply not the case that you're going to increase the pain to get through this.
Right.
The pain is getting in the way of these solutions. So first thing, get rid of the tariff. Second thing, set up the FBI talk working group. Third thing, own the deficit yourself and admit that you did it and that it's to require your party to stop with all the tax cuts and another party to stop with all the spending increases and come to an agreement that this is how we get trade deficits at a macroeconomic level.
And can finally move forward.
Yes.
And finally move forward. Real quick here, I want to shout out to iFua Boss, our regular watcher. Hello again. He says, good morning, guys, and thank you again for the breakdown. #stand up. I don't know if that hashtag's currently relevant for anything. I'm
I
not
don't
really in the
know, yeah.
hashtag world, but yes, we were trying to break this down for everybody real quick again. We are on your favorite streaming platforms. If you have any questions here for John, please throw them into the chat. Danny, you got another piece, or can we shift gears here a little bit?
No, I mean, I was just going to kind of summarize here what John had said. I see in his article he had like 3 case scenarios here. One was basically going tit for tat with getting worse and worse, basically, which is not good for anybody. And then he has here the best case scenario, which seems, in my opinion, more likely, which is the trade war gets stalled and the Chinese just wait us out till November. So it's one of those things where I kind of definitely agree with that one. And then, John, you had another one here as a question mark as a best case scenario. And you said, I would imagine the U.S. president sends fresh faces to address the matter in Beijing, which I would imagine is this upcoming October that you're referring to. Is that right?
Yeah, or later, or sometime.
Yeah, at any time, basically.
Yeah, so that'd give it a very low probability, but that's the way that this has to. I mean, if you think about it, I've given you a novel approach. People don't, particularly this group of people, don't change their minds. So we just got to new people who have new mindsets.
Right.
That makes sense.
And before we change gears completely, Brexit. What are your thoughts? Go.
Well, here the thing about Brexit is we have a prime minister now who is in a minority party and has destroyed the Conservative Party. And so we have 2 options the British people have to put on the table here. One is an election, general election, which was likely not to solve Brexit because it will only show the divisions of the country. You could call an election and you will get different representation from different parties, but there still has to find a coalition or a group to agree to one or the other things. So disaggregating from that, the truth is you have to put Brexit into a referendum. And this is the trick.
Again, you want them to vote again.
Well, here's the thing. The first one was just, should we leave the EU or not? And it was a vague thing. The referendum, this is the thing, it will be the language of the referendum that the battle will be drawn. Because the language could be vote, remain in the European Union will certainly be one choice. The second choice can be the soft Brexit deal that Theresa May struck with the European Union. So that is what is on the table as an actionable Brexit.
Mm-hmm.
The third one that could, but is very unlikely to be on that, which would be we will just leave the European Union. And it's
the flat, hard cut that they were talking
right.
about.
Now, that one is tied to Boris Johnson. So his government falls, the hard Brexit falls. And the group that doesn't agree with him, the Conservatives and Labour, is probably somewhere between Remainers and soft Brexiters. So you can have 2 referendums, one that has just the soft Brexit and the Remain vote, or the other one would be hard, soft, and stay. I don't know which referendum would be chosen. I assume it would be soft and stay. And that would be ending it. And it would disaggregate this issue from anything, and it would conclude it.
Oh, it's been going on for so long. Finally, it seems like in the last 2 years, it's kind of come to a real head. And now they have, 30 days, essentially, at this point?
Well,
to get out?
the Scottish Supreme Court knocked that thing down. So maybe they start getting it back to the session, the Commons, and deal with this in the next few weeks. But or again, the EU will turn to this and say, okay, can we give a 3-month extension? My idea about that is they will ask the British representatives
Try to go
show
for
them
Jan 1 or something.
Either the need for the time because they need a general election, or a need for a time because they're a referendum, or both. So they're going to ask for something to give the extension. They're going to use that extension on the British negotiators to get either an election or referendum, or both, as a quid pro quo for an extension. They won't just give, in my opinion, they won't just give an extension. That doesn't. Maybe they will. I mean, they might just avoid disruption. But I think the more likely thing is they try to help the Britain come to a resolution finally. So
now, do you think this affects the markets overall in a positive way? Or do you think
it's probably positive because the bottom's probably in, and again, all the bad news is priced in, And I'm particularly.
So would this be a time to buy into British stocks?
Yeah. I think so. I think it's all pound driven, not stock market driven, because you're buying. It has to be what domination the stock is in.
Right.
You're really buying the pound, and it's upside here. But yeah, the basic point I want to point out is all this discussion of things is all baked in. It's not prophecy. It's what's already being traded. So in truth, because of the sheer pessimism, both on the U.S. trying to trade deal and on Brexit, there's mostly upside to these stories.
Well, that's a good, quick summary, John. Thank you so much for that. Danny, you know what time it is.
It's the battleground.
It's time to go to the battleground real quick. Okay, so disappointingly enough, I don't really have anything to bring to the table today because I kind of feel fairly confident where I'm currently sitting, and there's a couple stocks in our watch list that I kind of want to potentially add. So I'm going to take the pass here, Danny, today, because seeing as I'm green and up, and for whatever reason I'm having a hard time getting my portfolio up, but I think I'm going to wait to give John his moment about the large cap trader service. So to you, Danny, what do you got?
I'm in the same boat. I'm just kind of, I feel like you don't always have to add to your portfolio constantly. I mean, we're not.
And that's why I'm not. There's things I want to add that
Right.
I've been watching. So,
right. So I'm in the same boat. I feel comfortable with the current holdings I have. We're down only on one of the current holdings, which is Square. I'll take a look here.
It's just so weird. That was one that I would have thought for sure would have been a huge winner.
Yeah, it was the earnings report that kind of took them down. The guidance and I think the slowing of their growth was worrying investors. But I'm definitely buying that for the long term. So it's not one I'm ready to just drop this yet. But then I had AT&T had a pretty big boost this week with Elliott Management coming out and basically saying they are upping their stake and they expect to grow AT&T by 65%. So that gave them quite a big boost. We bought that down in 34.42 and it's sitting at 38.19 today. So we're doing okay there. And then our other two are just kind of not really doing too much. We have Disney, which is
still down. That's the only one that's currently down in my portfolio.
Yeah, well, it's a Zacks rank 5 sell, which is never a good thing.
And it's an F VGM score. What do you think, John? Cut and run?
What's the name of the
like
company? Disney. DIS. Let me take a look here.
Because, yeah, it's kind of crazy. We kind of can't seem to understand why it's still down, and they have all these major products coming out so soon. They have these killer movies that are making a ton of money. Like,
I think a
how
lot of
could
that's
we be
priced
losing
in
on
though,
this?
too. So
I mean, the momentum of A. So
well, here's what you've learned. You're learning here that the stock's consolidating after a run. So what typically happens is the big run happened back in April, right? So there's a lot of profits in a lot of portfolios on Disney stock, and people are taking them. It's called distribution, right? So accumulation happened sometime in February and March in front of the news. Then the profit period came in April, and now people are saying, okay, the upside's kind of, the thing tanked off a high, and now it's distribution. Let's just take our money out of this thing.
yeah, I guess I can see that being huge potential. But momentum is A, so I don't think I'm going to ditch yet. I mean, we know this thing's going to win.
Well, you do see that the shorting dropped it down to, and they held the lows here of the May lows, the July lows. So there, if you believe there's another leg higher, now is not a bad time, but it's going to be probably retesting those lows one more time before it figures out which way it wants to go.
I'm going to hold out. I'm up, so I feel like I could manage this loss if it goes lower, and I just don't think that's ever going to be the case for Disney, especially how huge they're getting. I actually heard they're pulling ABC potentially from all the cable networks, and they're only going to stream it then.
I believe it. I mean, they're really pushing their streaming service. So I don't know. We'll see. That's kind of one of the bigger reasons I was buying into it. I think they're going to take a huge market share of that streaming community.
I haven't checked to see where their news sits in terms of national news, where they or if they're first, second, or third. But I guarantee that there's people that are going to be devoted to Disney and ABC that are going to follow.
I know I'm going to be buying into the Disney streaming service. I don't know about you guys, but it looked really awesome with all the new shows and the Star Wars stuff. So I'm kind of sold. It's $13 a month, so it kind of is the same price as Netflix.
If you buy it for a year, you get 2 years free.
Oh, well, then I'll do that.
Yeah. If you buy it for a year, you get 2 years free, which I think is a pretty crazy model. And there's actually other people that are actually trying to take that same model up. There was Sling. Sling is doing the same type of thing now.
Yeah.
But anyway, I think that's about it for us today.
Yeah.
John, I would like to thank you for coming in and being on the show. Anybody who's interested, John runs our large cap trader service available through the Zacks Ultimate, or you can buy that one directly. Any questions you might have for John, you could feel free to toss down in your comment section, and we will get them to him. Hopefully address them next time we're on the show. John, thank you so much for coming on.
Yep, thanks, guys.
And we will see you guys next Wednesday.
Peace.